Babes Inc. entered into a 5-year lease of equipment from Black Inc. At the lease's inception, it is estimated that the equipment has an economic life of 8 years and fair value of $250,000. The present value of minimum lease payments amounts to $215,606.50. The lease does not transfer title or contain a bargain purchase option. What is the nature of the lease, assuming Babes follows IFRS 16? And how would Babes classify the lease, assuming it follows ASPE? Okay, so under IFRS 16, the only exceptions are if it is a short-term lease, and this is 5 years, so no, not short-term. And if it is of low value, and this is definitely not of low value, it's 215K, so no, not low value. Low value. Therefore, this is a right of use asset. Right of use asset. Okay, so IFRS 16 criteria is relatively simple. What about ASPE? So for ASPE, we need to go through the criteria, which is 1, transfer of ownership. So is there any reason to think that the title will transfer at the end of the lease? Well, it says the lease does not transfer title or contain a bargain purchase option, so no. The second one is economic value. Is the term of the lease greater than 75%, of the asset's economic life? Economic life. Okay, so here the equipment has an economic life of 8 years, and we are leasing this for 5. So it's going to be 5 years over 8 years, which gives me, 5 over 8. Not sure why that must be formatted for dates for some reason. Let's try it up here. 5 divided by 8 is going to give me 62%. So no, not met, not greater than 75%. And 3 is going to be the present value of the minimum lease payments are greater than 90% of the assets fair market value. So let's calculate the present value of the lease payment. So we've got N is 5. We've got I is, we don't have I, do we? Actually, no, we have the present value of the minimum lease payments. They were so kind to us in this question, they gave it to us. So we've got the present value of the minimum lease payments are going to be 215,606.50. And we're going to divide that by the fair market value of 250,000. 86%. So it's not met. It's not greater than 90%. Therefore, given no criteria are met, account for as an operating lease. Okay, so this is going to be accounted for as an operating lease. So here it's going to be a right of use asset. We should actually say right of use asset. And here is going to be an operating lease under ASPE. And that's because these 3 capitalization criteria under ASPE were not met. Under IFRS, because it's not short-term or low value, it's going to be a right of use asset. And this really highlights how IFRS 16 encompasses almost all leases as right of use assets, whereas ASPE still has a broader definition between a capital lease and an operating lease.